Hey everyone, welcome back to Corporate Dakota. Today we're cracking open a report from Northeast Investors Trust. And let's just say their investment strategy is riskier than ordering sushi from a gas station. Stick around to find out why. But before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you want to chat about other investments. Northeast Investors Trust, in their semi-annual shareholder report, says that they manage about $127 million. Think of this report as a school progress report, but for your investments. This isn't a 10K or a 10Q. This is a Form NCR, which is something that management investment companies file with the Securities and Exchange Commission, or SEC. It's basically a certified shareholder report. This report covers October of last year to March of this year. You can find extra information about the fund on their website. If you'd like a hard copy instead, give them a call. First up, expenses. If you had $10,000 invested, it would have cost you $190 over the last 6 months. This is the same as almost 2% of your investment. Keep in mind, this doesn't include any fees your broker might charge. As of March, the fund had about $127 million in assets. This is the total value of everything they own. They have 48 different investments in their portfolio. The portfolio turnover rate is about 27%. This means that they're swapping about a quarter of their investments every year. Lastly, the trustee fees were about $300,000. This is how much they paid the people in charge of running the fund. So where's your money actually going? About 12% is in technology, followed by aerospace and defense, which is at 8%. Tobacco is next at 7.6%. Then building products at 7.2%. And diversified chemicals are at 6.6%. Metals and mining is at almost 6%. And oil and gas drilling at 5.2%. Industrial service and manufacturing is about 5%, while energy and natural resources is about 5% as well. Rounding out the top 10, healthcare clocks in at 4%. Okay, let's get into the real details, the top 10 individual holdings. The biggest holding is Pyxus Holdco, which is 7.6% of the fund. Pyxus Holdco is a tobacco company. Spirit Aerosystems is next at about 4%. Alenkrot, a healthcare company, is at 4.1%. KB Home, a home builder, is at 4%. XPO Logistics, a transportation company, is about 4% as well. Western Digital, a tech company, clocks in at 3.9%. And Sterling Sea Technologies, another tech company, at 3.9%. As Sterling Sea Technologies, another tech company, at 3.9%. As Sterling Sea Technologies, another tech company, at 3.9%. As Sterling Sea Technologies, another tech company, clocks in at 3.1%. As Sterling Sea Technologies, another tech company, clocks in at 3.9% as well. Performance Food Group is at 3.9%. And Comstock Resources, an energy company, rounds it out also at about 3.9%. And Comstock Resources, an energy company, rounds it out also at about 3.9%. And Comstock Resources, an energy company. Here's where things get interesting. The fund has almost 80% of its investments in corporate bonds and notes. This is debt issued by companies. Over 12% of the assets are in common stocks, which are shares of ownership in companies. They have a little over 7% of assets in cash equivalents, which are things like money market funds that are almost as good as cash. Less than 1% is in GDP-linked bonds. Finally, they have about 1% in net other assets and liabilities. Now, let's look at the official financial statements. In terms of assets, their investments are worth $116 million. They also have about $9 million in repurchase agreements. Liabilities are much smaller at about $500,000. For the last 6 months, they made $4.2 million in income. After subtracting expenses, they made about $3 million. However, the value of their investments decreased, leaving a net income of about $2 million. Speaking of money coming in and out, people sold more of their shares than purchased. Scroll 6 months ended. March 31, 2025. Scroll SIG. Now let's quickly blitz through the financial highlights table. At the beginning of the period, the net asset value of the trust was at $3.67 per share. By the end of the period, the net asset value went down to $3.62. Average net assets is around 1.9%, and the portfolio turnover rate is 27%. A portion of their investments, about $6 million, are hard to value and have significant unobservable inputs. Basically, they had to guess their value. A lawsuit was filed by a former trustee regarding trustee fees. The lawsuit led to indemnification of the independent trustees. The trustees expect to consider the trust's indemnification obligations in relation to the estate of a former trustee, which represents about So let's recap with an assessment of Northeast Investors Trust. One strength is their stated focus on generating income for shareholders, reflected in their investment choices. A weakness, however, is their heavy reliance on corporate bonds, especially those with lower credit ratings. This can amplify both income and risk. A notable risk is the level of level 3 assets, those hard to value investments. These can create uncertainty in the fund's true worth. An opportunity is the fund's smaller size, which could allow for nimbler adjustments in strategy as market conditions change. In conclusion, Northeast Investors Trust could be seen as a higher risk, higher reward fund geared towards income-seeking investors comfortable with uncertainty and below investment grade debt. Alright, that's our deep dive into Northeast Investors Trust. What's your take on this fund strategy? Let us know in the comments below. If you found this breakdown helpful, hitting the like button is a great way to show it. And be sure to subscribe for more corporate dissections. Don't forget to join our Discord community in the description to discuss further. Thanks for watching, and we'll see you in the next one.